Welcome back. I mean, not just to the show, but
Yeah.
also to being back in Bradenton because you've been on vacation for a while yourself, took a little trip. I know
Well,
where you went,
yeah.
but tell everybody else.
I don't think I would call it a vacation. It was more a working trip out to Montana, and I've been working diligently for the better part of 10 years to learn Wyoming, Montana, Idaho landscape, what real estate opportunities are out there, and so yeah, I the day I got there, I got my camper, got all set up, and the next day, starting at 8 a.m., I looked at real estate until 8 p.m. that
Wow.
night. Yeah, it was like a 12-hour grind looking at some land and looking at houses. So just trying to identify pockets of opportunity.
Hmm.
It is booming out west. It's like a new gold rush.
Really?
Oh yeah, it's unbelievable what's happening in those three states, and it's crazy. When I was out there 8 years ago,
Yeah.
um, it's it's anywhere from 5 to 10x the prices now than it was 5 years ago.
Wow.
So in other words, 5 to 10 times what I would have spent to get something then, I'd pay now, which is a little disheartening on one side, but on the other side, I don't see it stopping.
Of course
So
not.
it's an exciting time to be diversifying our real estate portfolio,
Hmm.
and I'm also learning this to share, with anyone that would like to diversify their real estate holdings.
Yeah.
Be a good way to diversify that on a real estate clarity. What do you
Well,
a
it's
real
actually
estate
called a real estate rundown.
real estate
You're getting them a little
rundown?
confused, Ryan. You got
Yes.
to keep the names right. I'm big on names.
I know. So, yeah, it was a lot of fun, but, one of the things that struck me when I was out there, I was talking to my realtor, and, I was surprised, that there's about his lack of knowledge about mortgages,
Mm,
and, it got me thinking,
right.
here we go,
Yeah.
about mortgages,
Yeah.
and, that it may be a great topic to, teach people
Hmm.
about what does it take to get a mortgage. I'm always surprised at how little people know about
No, you're
mortgages.
right. And I think we take it for granted. We were in the business for so long. That's actually where we met. That's where we learned not only about mortgages, but that's where we identified credit,
Hmm.
which allowed us to open up what was our largest company we've ever built
Yeah.
around debt. So, yeah, I think it's a great topic. I think we have a lot of years of experience in that world.
Hmm.
But I want to back up for a second because, you going out to Montana, when I met you, you were such a water guy. And
Hmm.
I think some people, even our listeners, they think they have to invest and buy where they live because they love it,
Hmm.
right? It's all
Hmm.
they know.
Hmm.
And so, what is it about Montana? What does it bring you? Why are you gravitating there? And like, do you still feel yourself loving Bradenton as much
Mm.
as you did when you were a kid or when you were a teenager or adult? Like, why
It's
all of a
interesting.
sudden Montana?
Yeah, I think as we get older, our perspectives change,
Yeah.
and for a long time, all I knew was Florida. That's all
Hmm.
I knew. I'm fourth generation Florida, maybe more, and like the water, the Gulf of Mexico, this heat is like all I knew.
Right.
But as my horizons broaden, as I get older, and my perspectives change, I think real estate is a lot like the weather. There's seasons
Yeah.
for real estate, and if someone nailed me down to one point of why,
Hmm.
I would say diversification.
Okay.
And I really believe in Florida. We've gone deep in Florida with real estate. We have deep roots here. We
Right.
have a lot of interest here, but I don't want all of our eggs in the Florida basket. And I think it's important to diversify, regionally. It's
Yes.
important to diversify even internationally.
Hmm.
Plant flags, financial flags in multiple places.
Yep.
And so, I'm always looking. You know that about me. I'm always looking because I'm not someone who could just sit and farm this one area for real estate opportunities. I like to farm globally. So
there's a lot that goes into
yeah.
that, though, because it's not just loving an area. I think you're looking at more than just the area. You're looking at the surroundings. You're looking at what's happening in
Mhm.
neighboring cities, right? That where
Mhm.
it's going to spill over
Mhm.
eventually. Like there's so many things that go into identifying an area of opportunity is
Yeah.
what I would call it.
Yeah.
And you did the
Opportunity
same in Costa
zones.
Rica.
Yeah. Yeah. Same thing in Costa Rica. There's opportunity
Mhm.
zones, and the I have an instinct,
Right.
right? But I'm an economist by trade, so I look at the laws of supply and demand as one of my guiding principles.
Right.
And then there's like this intangible, and I'll use the word vibe, or
It's like hip.
it's something that's happening there.
Yeah.
Maybe it's hip. Maybe it's there's just a way
Right.
about the people.
Yeah.
And
Which is a big deal.
the people's the number one.
Totally.
And when I'm out there and I'm looking for opportunity zones, first it's people,
Mhm.
and then it's geographic assets.
Right.
What does the place bring to the table?
Mhm.
And then it's things like growth and what's happening to the market and the demographics. And so I've just identified certain areas in Montana as hot spots. And there's areas in Wyoming that are hot spots. There's areas in Idaho that are hot spots.
Mhm.
And so, I went out and I invest, that's what I do. I invest my time to put boots on the ground, get in a side-by-side and go look. So that's an important part of really like who I am and what makes me tick. I mean, that's my passion.
And I love that because, with having this real estate rundowns that we're doing with people on calls,
Mhm.
we'll hear them ask questions like, where is the best place to look for investment
Mhm.
properties?
Mhm.
Or, should I be relocating? And if so, where do you see an area that I'll fit well in
Mhm.
based on who they are and what they're about and if they're a family? So you educating yourself and spending time in the trenches and going around to all of these different places and really becoming knowledgeable of what's happening in those areas is crucial
Yeah.
for the success of our listeners and also for people who are calling us and wanting to talk, like where do I go? But where do you go is half the problem. The other
Mhm.
half is how do I pay for this?
Right.
Right?
Yeah. And, there's options.
Yep.
But the one that I thought it was important to talk about, like you said, I mean, we were in the mortgage business in arguably the hottest season of being in the mortgage business.
What are the chances?
And, we had about a 5-year run in the mortgage business. I absolutely loved doing mortgages.
Me too.
It was probably my favorite occupational activity
Yeah.
that was very defined that I've ever done.
Why
Yeah.
though? What part about it did you love? Because I know what you didn't love.
Yeah. I mean, what I loved was someone would call and they were sitting on a stack of home equity,
Mm-hmm.
and I loved showing them how they could access that equity in order to achieve their dreams and their goals,
Right.
whether it was fixing up their home or buying another home
Mhm.
or putting their kid through college, and showing them how actually we could do that. And it was financially feasible,
Yeah.
but also just it was like solving
puzzle.
a puzzle
Totally.
every time someone called. Where do I place them? Why am I doing that? And then trying to get it approved was a whole nother ball of wax. So, we got really good at it.
We got really good. We were a powerful team.
We were very, very good in the mortgage business. We were the top producers in a company of 100
Yep.
agents. And it was, it wasn't because we were so great. I think it was because we worked well together and we were so passionate
Mhm.
about it. And I was good at a part of it, and you were so good at handling client care.
Yeah, I can remember the first time we actually tested this because we didn't work together at first. We
No.
were each individual on our own.
Yeah.
And then you had another assistant,
Mm-hmm.
and then you're like, you know what, let's partner up. And so we partnered up. And my favorite part was like, I like challenges.
Mm-hmm.
So if someone is like doubting or falling off the fence, man, put me in.
Yeah.
I want to talk to them.
Yeah.
And I love fielding the phone calls.
Mm-hmm.
And that was the part you hated, but I hated working up the deals and I didn't want to deal with the numbers.
Mm-hmm.
I wanted to really connect on the emotional side with
Yeah.
people.
Yeah. And I wanted to connect on the education side.
Right.
So that 1-2 punch of you connecting with them, at the person level, the human being level, and I was connecting with them at an education level was really powerful.
Yeah.
And I haven't forgot all those little things that we learned along the way.
Mm-hmm.
And mortgages have changed since the Great Recession. The Dodd-Frank legislation came in and changed the way things are done. But the fundamental underlying, rules of the game, as it were, haven't changed. And one of the most exciting things today that I love doing is helping someone that doesn't think they're able to buy a house yet.
Yeah.
Open their eyes and watch the scales drop off their eyes when I show them that they are able. And I can think of several couples along the way that I would be meeting with years ago now. And they were renting and
throwing their money down the tubes every month.
Making their landlord wealthy. And I'm like, well, why are you doing that? And they wanted to buy. And they're like, well, a couple more years and we're going to buy. And I'm like, whoa. Like, why aren't you buying today?
Right.
And they're like, well, we just, we're not quite ready. And, we think prices are too high. And I tell people the time to buy real estate is when you are financially able to buy real estate. And even now, people are like, don't you think a downturn's coming? Maybe, maybe not. All I know is 40 years from now, it's not going to matter.
Right.
What's going to matter is that you become an owner as soon as you're able.
Well, yeah. I mean, you're just making someone else money or you're making money. That's just what it boils down to.
Right.
And so ownership is simply just a way to build wealth over time.
Yeah.
And so it's always the right decision in the face of, should I rent, quote unquote, flush it down the toilet, or should I own, which is saving,
right,
in a unique kind of way. So
absolutely. And so, I thought it might be fun today to kind of talk about the attributes of getting a home loan.
Yeah. So one of them I would love to know is, and I can remember when I bought my first house, I didn't know, like, do I go to a bank or a mortgage broker first and get an approval letter? What do I even do before I ever connect with my realtor and go to look at the first house?
Yeah.
Should I be doing anything on the finance side?
That's good. That's good. I think it's healthy to define where to go. Right. So all of us have banks and we have banking relationships, and we can walk into our bank and get a pre-approval for a mortgage or attempt to get a pre-approval for a mortgage. Alternatively, there is a professional called a mortgage broker,
right,
where you walk in and you seek to get a pre-approval. And the difference is that a mortgage broker can shop across many different lending institutions to see on that given day who has the best underwriting standards to fit your needs and who has the best rate and term for your loan agreement. So I really like the idea of going to mortgage brokers because they have a lot of flexibility in where they could send your file. And based on their level of expertise, they're going to be able to determine just by hearing where you are, they're immediately going to have an intuition about which lender would probably make that loan to you.
Well, and I think it's better because while they're looking over, they've got a vested interest to put you in the best product. Whereas the bank, they don't have really any vested interest but to sell you on what they have at their fingertips.
That's a good point.
And so you don't even know if that's really the best for your situation. It's just all they have.
Yeah.
Whereas a mortgage broker, they're looking out for your best interest, and I can remember how you would, like, you may use one bank for one portion of the loan and then another for the HELOC. Or I can remember you being very strategic with your approaches, and the more products that you have at your fingertips, the more that allows you to curate, right, the best mortgage situation for the borrower.
Yeah, that's really good. I'm glad you brought that up because every single lending institution. Some of these you may have never even heard of before. I mean, we've all heard of.
I heard it countrywide. If I heard it one more time, I would rip my hair out.
Yeah, I mean, some of the lending institutions out there are not brick and mortar banks, and so they can offer some pretty creative, financing opportunities. And
Why? Because they specialize strictly in mortgages?
yeah, so I mean, if you're lending your own money, you can create whatever rate and term you want.
Mhm.
You can determine what the interest rate's based off of,
Yep.
which index.
Mhm.
You can create what type of adjustment terms you have
Right.
on an adjustable rate mortgage, for example. And so there's a lot of alternatives depending on what the goals are.
Okay, so what do you recommend? Do you recommend they get a pre-approval letter before they start house shopping? Or what's the order
Absolutely.
of operation there?
Yeah, the order of operation is that as soon as possible, have a mortgage professional look at your situation and see, are you approvable? And then you get a pre-approval, and that is basically your ticket to shop.
Just a piece of paper.
Yeah, and
what does it say on it?
It'll say you are approved for a loan, and it'll give you the exact criteria for the amount of the loan that you're approved for, so you know exactly how much of house you can shop for.
Okay.
And now you go out, and by the way, the listing agents are going to take you much more seriously when you have a pre-approval letter.
That's good.
When you make an offer. So
Right.
if you have two offers that are sitting side by side, one that doesn't have pre-approval and one that does, the one with the pre-approval letter is going to be a much more powerful offer. And a lot of times it's actually required.
Yeah.
So a lot of times they require a pre-approval letter to even make an offer. So, the mortgage process, I think, we used to look at it like the three-legged stool.
Three-legged stool.
So you can, the easiest hack, okay, the easiest mortgage hack is
Okay.
remember a stool that has three legs.
Yep.
So every mortgage basically has three attributes that you need to have in order to get it.
Let me see if I can guess what they
Okay,
are.
see if you can remember what they were.
Assets,
Assets,
income.
income.
I don't know the last one.
This is your bread and butter. Credit.
Oh, credit. Well, yeah. I mean, I kind of would say
So
that.
there's the three-legged stool, right? And
Yep.
just like a stool, the more stable, the stronger the legs of the stool, the more stable the stool is going to be. So the stronger your asset, income, and credit position, the stronger you are as a borrower,
Okay.
and the stronger the stool that the bank feels comfortable sitting on.
So what do they look at first?
Okay. So the first thing they're going to look at is income. They're going to see, okay, how much does this person make
Mhm.
versus how much they spend? And I know you love to talk about
Debt to income ratio.
debt to income ratio,
Yes.
right? The debt to income ratio is the kind of the analytic that a lender utilizes to see how much money's coming in versus how much money is going out.
So they're not necessarily approving them based just on their credit score is what you're saying.
No.
Okay.
No.
Because that's what people think.
Yeah, no. I mean, income is a big leg of this stool.
Mhm.
And income can come from salary.
Mhm.
It can come from self-employed income,
Yep. Social Security,
Social
child
Security,
support.
child
It could
support.
be any of those.
It can be any of those. And they are going to utilize, W-2s or tax returns in order to validate the income.
Right.
And they're going to say,
Well, they used to not even have to do that. Do you remember? It was like a VO,
there was,
VOE.
yeah, there was all kinds of no income products. There was
Right.
stated income. There was actually like no income, no assets.
Do those exist anymore?
There are some products out there still for stated income, and generally they are for self-employed individuals.
Got it.
That was what they were always intended, because tax returns can be very convoluted and complicated when it comes to business owners.
Yeah.
And so they created the stated income product for self-employed business owners that obviously were in good financial shape. Yet back in the heyday of
Mortgages.
06, 05, the stated income just became a free ticket to borrow money. And, and
We
then
see
they
where
even
that
came out
got
with
us.
the no income, no asset
Yeah.
program. I mean, we were able
No
to give,
doc.
yeah, we were able to give people a loan that had a 550 credit score, and we didn't even have to prove their income, assets, in nothing. Like,
That's even hard to fathom
and
that
it
that
was
was
like
even
90,
allowed. And
95% loan to value
we
too.
act shocked that it all came, crumbling down. But I think that without getting too much into it, because it's so much to grasp.
Mm-hmm.
So you're saying getting a letter before they go look.
Mm-hmm.
Then what's the next thing?
Well,
How do they know if they should go with their bank versus the mortgage broker?
so
What if they get a better rate
I
at their
mean,
bank?
I would go to both, but the idea is that a mortgage broker is going to be able to look across many different banks.
That's
So
a huge
I
advantage.
I think that's the thing to
Yeah.
do. So I
And you
won't.
have people on your team too that, if they're calling in to do those real estate rundowns that you can connect them. Is that right?
Yes.
Great.
Yeah, absolutely. I mean, that's the idea. We want to be a one-stop shop to point people in the right direction based on where they're at.
Yeah.
So now we got to get back to the stool.
Okay.
I'm not done with the stool.
All right. I know. And we're talking about income.
Yeah. So the three-legged stool. All right, we have one leg is income.
Okay.
They're gonna look at your income and prove you have income.
You told us all the sources of
the
income.
next leg is going to be assets. Now, what does assets mean? I'm not talking about grandma's dishes. Okay. Yes, it's an asset,
Or
but
cars.
no, it's not going to help you to get a mortgage. I'm talking about liquid assets.
Right.
And what the bank looks at in the form of liquid assets is money in the bank,
Yep.
checking or savings.
Mm-hmm.
I'm talking about retirement accounts, IRAs or 401ks. I'm talking
It
about.
has to be in your name, right? It can't.
Yes.
Yeah.
It needs to be in your name.
Yeah.
Stocks, bonds, CDs, any of that. And we're talking about savings.
Right.
And the bank is looking for what they call reserves.
Mm-hmm.
So when you go buy a house, you need a down payment and you need closing costs in order to buy it.
Right.
So that's part of the reserves the bank is looking for. But they're also looking that you have enough money in the bank to pay at least 3 months of your mortgage payment if you lost your job. That's what they call reserves.
They actually call it PITI. And I remember that term very well. It was principal, interest, taxes, and insurance.
Yes.
And it's the combination of all of those items, 6 months worth in the bank.
Yeah, it can be anywhere from 3 to 6 months.
It has to be seasoned, though.
So another source of assets can be gifted funds.
Right.
So someone can give you the money, but you can't get the money today and turn around and show the bank tomorrow that you have reserves. Generally, it needs to be what they call seasoned.
Yep.
That it needs to be in your account for a minimum of days. Could be 30, 90, depending on the lender.
Mm-hmm.
So they want to see, bottom line, they want to see you make money, leg number one, and you're making more than you spend.
Yeah.
That's what the debt to income ratio measures.
Exactly. So it's really the two stools are just simply debt to income ratio.
The next leg is assets. That you have enough money to close on the home,
mm-hmm.
and you have enough money to pay your bills if and when you were to have a hardship.
Yep.
Okay. And the third one is credit score.
Yep.
Okay. So they're going to look at a tri-merge credit report. We did a segment on credit reports.
Yes.
And if someone wants to learn about that, they should go back and listen to that one.
Well, in annualcreditreport.com, it actually is a tri-merge.
Okay.
So they can pull it for themselves once a year and see specifically what that score is based on the tri-merge.
Right.
Which is different, right, than a one pull.
Yes, it is. I mean, a tri-merge is basically looking across all the different credit bureaus,
mm-hmm.
and they're going to look at all of it, look at the whole picture,
right,
and see what is the borrower's ability to pay me back. Yeah. What's their track record?
Mm-hmm.
Do I have a good feeling about this person based on their credit score, or do they look like someone that doesn't care much about paying their bills? And so based on those 3 legs of the stool, they're going to render a decision. And that's what's called a pre-approval letter. They say, based on these 3 things, this is how much you can borrow.
So if somebody gets denied, because this does happen,
mm-hmm.
do you recommend that they continue shopping? Because that can just suck the wind out of your sails when they say, oh, this is all we can qualify you for, or oh, you didn't qualify for the mortgage. And I've seen so many people back away from looking to buy because they get one denial.
Mm-hmm.
But like everything else in life,
mm-hmm.
right? You've got to keep pushing. And I know that we've had that experience and we continue to shop. Right mm-hmm. after our bankruptcy, it was tough for us to get a mortgage.
Mm-hmm.
But we just kept pushing and kept pushing. So what would you tell those who maybe don't even own their first home right now and they've gotten denied? So they're a little gun shy.
Mm-hmm.
What should they do?
So I would say that it depends on what the denial's for. A lot of times, if you get denied, the bank or the broker is going to tell you exactly why you got denied. So in your credit letter, credit decision letter,
Right.
it's going to tell you what area was deficient. And so that then you could go and remedy that. So if it's credit score, okay, then you may engage in some type of credit repair apparatus.
Right.
If they said, you know what, you carry too much debt, you have too much debt, and it's messing up your debt to income ratio. So your income leg of the stool is broken.
Right.
That means, guess what? You have to either increase your income,
Yep.
go get a second job, third job, or you got to pay some debt off. That will improve your debt to income ratios.
So before they apply with someone else, they should look at trying to go after whatever the area they were denied for to improve the overall ability to qualify.
Well, okay. So if you had a stool and I was asking you to sit on it all day, and the carpenter that made the stool told you that one of the legs looked kind of weak, are you going to go to another carpenter and ask him for a second opinion and on the same leg? Or are you going to go and say, hey, let's drive a couple screws
Yeah, I'm
into
gonna
this
try to
leg and
fix it.
strengthen it,
Right,
right?
right.
So I think if we're using the same analogy, the idea is let's go repair the leg of the stool that
Yep.
needs to be repaired,
Mhm.
and then we'll circle back.
Right.
Otherwise, there's no reason to continue banging our head against the wall
And hitting your credit score.
and hitting your credit score.
Right.
If you get declined, especially if it's a mortgage broker and you looked at it across multiple lenders, they're going to give you feedback of why you got declined.
Yep.
And then it's about, let's go remedy it. Maybe it was the asset position, maybe the asset
Continue
position,
saving, building your assets.
or try to go to parents or uncle or someone and maybe get a gift.
Yeah.
So there's a lot of first-time home buyer programs out there, and I think that people underestimate their ability to be able to borrow. And I know everyone is going to have a question about interest rates right now because interest rates have been rising.
They didn't this last time, though. I think they stayed the same this past week. So
and
they're leveling out a little bit.
And historically, they're still pretty fair.
Yeah.
But I think just to keep it simple, as far as timing of the market,
Yep.
right? We can't time the market. We can't time interest rates. But what we can say is get in the market when you have the money
That's
available.
right.
And you can always go back and refinance down the road for
Yep.
better terms. I do believe over the course of the next 5 years, interest rates will be dropping again. So that'll give an opportunity for banks to do, they will relook at the interest rates and be willing to do that modifications.
Well, interest rates too should never hold somebody back from home ownership because you're always going to win.
Yeah.
So just get in the game. And just to recap these steps before we go today, make sure you have a pre-approval letter from your bank or
Mhm.
mortgage broker.
Mhm.
We recommend mortgage brokers because
Mhm.
they have a portfolio of products.
Yep.
And then also just knowing what specifically they're looking for to accomplish that approval letter, which are the 3 legs to the stool:
Yes.
assets, income, and credit.
Yes.
And we've identified each of the things that fall under that category. So I think that in and of itself, even having those tools, if they're still struggling or not sure, is now a good time. There's so much change. I'm
Mhm.
going to wait, ... I love that comment.
Mhm.
Call us.
Yeah.
Set up a call with one of our representatives who can walk you through and even help you set a timeline
Mhm.
and give you something to live into for accomplishing homeownership,
Yeah.
right? And the mortgage is one piece of it, but sometimes just having a professional talk to them who's been there, who's done it, just kind of helps steer that and put a timeline in place to accomplish it.
That's
So
good.
thanks so much for sharing.
Yeah. Thanks for all your insight and memories.
Yeah, it makes me want to run out and buy another house again.
Let's
So
do it.
get that property in Montana.
I will.
All right.